Welcome back to Bazaar Morning Call. This morning, the SGX Nifty is suggesting a sharp cut for our markets. But let's see. We'll take it as it comes. For now, our market has been resilient, at least up until now, holding on to the 20-day moving average. But our research team is here to help us prep for the day. Anuj, what are you looking at today?
So, Sonia, just to reiterate the base case, if the market has a gap down, you look to see the selling exhaustion, especially around that 20-day exponential moving average 475, if that happens. And if that happens, then I think you back stocks where there's leadership and relative outperformance. So ICICI Bank for sure and State Bank of India. I think these are clearly two names which are now go-to stocks for the market. Every dip, if you sort of buy these stocks, you're making a lot of money. So, in a bull market of their own, both these names. So that's something that I'll keep my eye on. But Nigel, you're watching out for steel companies.
Well, that's right, Anuj. It's always a bit of a risky trade, steel, but there could be relative outperformance. And yesterday, in the final hour of trade, all the steel names, they showed some strength as well. The news that's coming in is ArcelorMittal. They've gone ahead and they've increased prices yet again in the UK region. Remember, in Europe as well, they're already taking a couple of price increases. And now they've pushed through another price increase in UK, topping the August price increase as well. What is the impact of this? Well, European prices could remain elevated. That's in spite of weak demand that we're seeing out there. Capacity shutdowns as well could continue in various pockets of Europe. So if that happens, then inventory buildup is not there. And, then prices could continue to remain elevated. For the Indian companies, well, it could be a bit of an advantage scenario that plays out. Why is that? Because global prices could get some bit of base after seeing a sharp correction in the last 2-3 months odd. The Indian steel mills, remember, the cost of production is a little bit lower because of accessibility to iron ore as well as power costs, not as elevated as what we have seen in Europe. And the third factor is we are getting, news that's coming in from various pockets of Delhi that maybe there could be some relief on that export duty. If that happens, then in fact, volumes as well do see a bit of a relief on that front because they can export without paying that 15% off. So all these factors together could help steel stocks to outperform, though China continues to remain the joker in the pack. If demand doesn't come up there, then globally steel stocks will get hit. But for the time being, going with green for these stocks.
And we were speaking to the management of Shyam Metallics and they told us that the EBITDA per ton is expected to fall to 11,000 and they see more pressure there. So I guess pricing also under pressure, yes. Demand also getting hit. So the challenges still lie for the steel sector on the whole. We'll keep them on our radar. But Hatsun Agro is the other one that we're looking at this morning. Nimesh is here to tell us why. Hi Nimesh, good morning.
Hi, morning, Sonia. So, in a disclosure, surprisingly, the promoter entity has sold 1.2% stake in a block deal in Hatsun Agro. Well, the buzz was that maybe a leading boutique firm was a seller yesterday in a block deal, but it turned out to be that the promoter entity has sold 1.2%. Now, the promoter owns close to 56%. So, a bit of negative because the promoter entity sold. In terms of buyers, couple of marquee names, so SBI Mutual Fund and Sundaram were the buyers in yesterday's block deal. But the fact that the promoter has sold 1.2%, a bit of red to start with in Hatsun Agro just because the promoters have sold, and there is no reason or explanation given as to why they've raised this money by selling 1.5% stake in the company.
Okay, thanks a lot for that. So that's on Hatsun Agro, promoters selling stake. But GMM Pfaudler had an analyst meet yesterday and my colleague Vahishta attended that meeting. Vahishta, what was the key takeaway?
Hi Sonia, yes that's right. GMM Pfaudler did have an analyst meet yesterday and they had given FY25 guidance, and this is only from the existing business. It does not incorporate any mergers and acquisitions which they're planning to look forward to in future. So for the revenue is expected to grow to 3,700 crores, which means a 14% CAGR from FY22 to FY25. EBITDA is expected to grow to 630 crores, CAGR of 24%. EBITDA margins would jump to 17%, which currently is at approximately 13%. And the return on capital employed will be at 25%. Also, the capex is expected to be at 3% of the revenue. GMM Pfaudler has also said that the pharma sector capex is slower than the chemical sector capex, not just in India, but just also globally. And the company is looking for inorganic growth with the size of acquisitions going up to $20 million.
Okay, so we'll keep an eye out on GMM Pfaudler. In fact, yesterday the stock moved higher on very large volumes. But Vaistha, stay with us. You're tracking defense companies as well. Tell us which ones and why.
Yes, the first on my radar is Hindustan Aeronautics, wherein the company has said that they had produced gas turbines for the INS Vikrant, and these were assembled and tested at the company's facility at Bangalore. And the next stock on my radar is Paras Defense, wherein they have said that they had entered into an exclusive teaming agreement with ELDIS Pardubis, which is a leading manufacturer of active radar systems in Czech Republic. Now, this agreement is to provide turnkey anti-drone systems for civilian airports in India.
Okay, thanks a lot for that. Lots happening in the defense space and these stocks have been on fire. But let's go across to Sonal. She's tracking the fertilizer companies this morning. Sonal, good morning.
Good morning, Sonia. Well, sources told CNBC Awaaz that some of these PSU fertilizer companies, they are up for divestment, and this has been in works for a long time. So the government said they have identified 8 fertilizer PSUs for strategic divestment. In the listed space, the likes of RCF, we have National Fertilizers, there's FACT, all of them could be up for sale in the coming quarters as well. The other ones from the unlisted space include Hindustan Fertilizer, there's Brahmaputra Valley Fertilizer. However, important to note that this plan has been going on for a while and the decision is not final yet. So that is something we'll be watching out for. But these stocks will be in focus today.
Okay, thanks a lot for that. Thanks to our entire team actually for putting all of these stocks together in case you missed out on them. Here's a quick recap. Stocks with positive news flow. There's Tata Steel, JSW Steel, JSPL, SAIL, GMM Pfaudler, the defense names HAL, Paras Defense, RCF and NFL from the fertilizer space. While stocks with negative news flow, there's Hatsun Agro on the back of the selling that we've seen by the promoter. All right, well, moving on, Manisha Gupta joins in. There's so much action happening in the commodity universe. Brent crude prices have been under pressure for a while. Manisha, good morning. Welcome back. There's lots that has taken place since you left. But you tell us, what are you tracking this morning?
Oh, well, absolutely, Sonia. You know, never a dull day when it comes to commodities, and that continues during the day today as well, where you are looking at the U.S. natural gas prices now trading at a 4-week close. $8 per MMBTU has been broken on the weaker side as well. We are looking at the new UK PM now to unveil energy rescue plan on Thursday. So all eyes on that event for this space there. The crude oil prices, well, yes, have extended declines, now trading very close to the lowest since the month of Feb. The OPEC and allies cutting output by 100,000 barrels per day has seen a reaction and has been digested into the market. The concerns clearly are about the weak Chinese demand and the ECB monetary policy meeting on Thursday, where the markets are anticipating a further rate hike. In the metal space as well, whether it's gold, silver, copper, iron ore, all of these metals have started slightly on a weaker note. The strength in US dollar also continues to weigh onto this space.